Well, there we go. That probably helps. Good afternoon, everybody. This is Frank coming to you with the market recap here on the 21st of December. The week is over. Christmas is about to kick off. And to no one's surprise, I should hope not, stocks continue to sell off as bears have had control from the get-go this week. We've seen major support levels get taken out left and right like they didn't even count. And so no surprise, another day of heavy selling as we get into next week. Now, going into next week, really light on the earnings front. I don't believe there's any S&P companies. There's just a handful, and I really mean a little handful of smaller size companies, it looks like. So we're going to be super light on earnings. We'll close shop early on Christmas Eve, closing down at 1 Eastern for the market for the holiday. Obviously, we'll be closed on Christmas. So going to be kind of an interesting light week going into next week. Maybe the spirit of Christmas will touch the bulls and they'll at least get a little bit of a rally at some point in time. But bears very much remain in charge. No two ways about that. Taking a look at the S&P 500, of course, we know where we took our support level out. We kind of paused for a little bit at a previous resistance point. Basically, we filled that up here today. I mean, we sold and we're kind of hanging on that next level, which isn't a major level. We did see some action, back here. It was resistance zone for a short time period. Has never been tested as support, but price action did definitely have something going on back there. Keep an eye on that as that next level doesn't appear to be a particularly strong level of support, but it certainly can and potentially will act as a short-term support zone. We're very extended, but again, this has been true pretty much all week long. This is why you never, you can think it looks extended all you want, but you never assume that just because you think it's extended, it can't keep going, right? Definitely a rough day. 24, a nice round number. That's going to kind of coincide with that old breakout point. So maybe that will be a point where some profit takers will step in on those short sellers. Obviously, I can't imagine that being a strong buying location for anything significant. Well, the way things are going lately, it will probably be taken out without much difficulty, right? Over in the NASDAQ, very similar, have filled up that space, worked into that next level, that old resistance zone over on the NASDAQ. Not a lot of support. We'll have little things, maybe this old floor back here, maybe this old ceiling back here. Things can develop, but as you look at this, and we've done this several times, we'll do it several more before it's all said and done, there just really isn't any more major support. Things can and maybe will develop, but as it's currently, sitting right now, we've taken out the major support, all over the place, certainly in the NASDAQ. A very heavy day, down over 3%. In a sea of red, it was amongst the reddest, if that's a word. So Dow, not to be outdone, continues to fall, working closer and closer to, again, an old resistance level. We're not dealing with strong levels of support, in the immediate future, at least. Pretty ugly, pretty red. No two ways about that. And lastly, over in the Russell, did close below 13. Now that's kind of a zone. 13 is a nice, easy number. It's probably what I say. It might be what you say. It's a lot more fun to say 13 than 1297 or whatever. But kind of hanging around in that area. This trend line that we have here isn't going to kind of be perfect, but it's kind of coinciding with some lows, puts us around that 1250. So, if this is a clean break below 13, and I think it's kind of on the, neck and neck, I think you could argue either way. We clearly did close below 13, but that area, I'm not sure if we'll call that a break below that or not. I don't think it's a clean break, but I'll be watching that trend line. It's going to put us around 1250. And of course, 1200 is kind of the next stops. So, more and more room. Now, again, at some point in time, we're going to see some sort of a rally, right? A bearish retracement will develop, and hey, maybe it's something bigger than that, but it's going to have to do a heck of a lot to convince me, at least. Very rocky times ahead from the looks of things on our indexes. Volatility continues to remain high. Of course it does. We're selling lots. We're breaking support. Another spike over in the VIX here today as I think it goes without saying traders are on edge right now and don't really need much of a reason to panic. And until that stops, probably hard to imagine why it's going to stop. All across our sectors, it's going to look pretty rough as well. Continuing that breakdown over in the materials sector, as we've kind of seen before, that was an old zone that's clearly been taken out now. Really not a lot to hold this guy up until we approach that 45 or maybe this trend line that's going to put us probably more in the mid 46s. It's that general ballpark, but really we got a ways to go before we're testing any real support over in the material sector. The energy sector is just getting crushed as it took out that bottom. And this was probably the big one here, but of course we took out this bottom here and we're continuing to fall with really not a lot to prop us up until we get closer to $50. So again, it's not just how ugly these charts are, and at least from a bullish point of view, these are very, very bearish charts, but support zones are just a ways away still, and we're moving fast to the downside, right? And we still got a ways to go before support. Over in the financials, we were able to kind of hold this old support zone here today. Certainly, I wouldn't trust that as anything significant, but it is worth noting, that is where it stopped. And that should be a tempting place if you're a bull from the point of view of support is there at least. Anything else, you're not going to be seeing technical signals, at least I'm not. I can't imagine anybody is. If this falters, much like we saw in energy when it kind of broke down earlier in the week, there's just nothing there. There's just a whole bunch of empty space to the downside, no levels of support to potentially prop us up till we get back down in here in the low 20, 50 type of range. So we're holding here today. I guess you could argue, but it's it was close, and there's a lot of space if that does falter on us there. So I mean, you guys are seeing a theme you saw all week long. I'm sure you saw it today on your own, but of course, industrials are going to get in the game as well. Currently working on filling up that space. Again, one of those empty space type situations. We have a few little old support zones, but nobody's paying any attention to them. We've got an old breakout point. That's really probably our next significant level around 58.50. We do have a trend line from a longer term perspective around 60 or so that can act as that catalyst for that retracement to develop. And again, that retracement might start on Monday when nobody's trading and they're hanging out with their families for Christmas Eve. We'll see. But still, again, a lot of space, and we're seeing it over and over, no matter what we're looking at, right? In the technology sector, rough day over there, almost 3.5% on the ETF here today after breaking down early in the week. I mean, we've almost filled up the entire space of this old support into this old resistance level in a week. Very, very, very ugly, very red, very, very bearish, no doubt. No, not a whole lot different than yesterday, right? Continue to watch that area. That can be kind of that, that next support challenge for us. Again, I don't know. I mean, I'll always respect support because you should, in my opinion, but I can't imagine buying off of, blindly any of these support levels that we're seeing within our sectors. As I was going through my scouting for next week, I mean, I was having a hard time finding anything I felt comfortable even kind of watching as a bull. It was very difficult to find anything that looked like, well, if things shake out the right way, it's going to be hard. So it was rough as looking for bull setups. I wasn't looking for many, but you always like to have a few, and you never know what next week's going to hold. Over in staples, we continue to just get beat up. The percentages aren't as bad as, and hey, Whitney, how are you? And Merry Christmas to you guys as well. It's going to be strange not seeing you for a few days. So, but staples, maybe they need some time off after, breaking down. I mean, this has been just an epic fall, at least in my opinion, once we took out that support level, took out that trend, no matter what you were looking at, whether it was the support here, the 200, the trend line support here, it has just been beautifully bearish. I guess is a good word, a good couple of words to describe it. Really, we've got a ways to go before we're going to get to support. As I was going through the consumer goods sector in the S&P today, there were some things that weren't, really, really ugly. But there were not very many good-looking charts, in my opinion, across the board in that sector. Of course, now we've seen things really turn around quickly over in the staples sector. So again, another very, very bearish Christmas for the staples sector, it looks like. Now, utilities are still putting up the fight. They tried again. I don't know if you guys watched this so much on the intraday, but we really kind of saw some nice upward movement on the intraday here today before giving it all back before the day was done and closing near the lows. And now we're getting, to that. We've kind of been using that trend line as a zone, which I think is the right approach to take. But now we're getting about as close to that trend line as you can get without saying it's broke. And so, that's not a bad thing necessarily. Who wants, I'll speak for myself. I didn't want utilities to have a great day today because I still need at least a candle before I can get in to that sector. And if I was going to get a giant green candle today, that was going to make it a little more difficult to maybe want to get into that next week. So I'm glad that it didn't play out that way, but we're now kind of hanging right on this trend line. We've seen buyers trying to come in for now several days and get this going really ever since Monday when we had our steep sell-off. We saw some buying action. It lost buying action all week long. So we're seeing money wanting to come into this sector as opposed to other areas, which are pretty much just giant red candles to the downside. So we are seeing some faith, but it is just not ready. It's still getting caught up in the real sweeping selling that's happening in the market right now. Obviously, we'll keep an eye on this trend line. I liked it a lot better, in that 55 range, but now we're at 54, got to deal with it. As long as we are happy with this trend, if we start to see some signals early next week, I'll feel comfortable looking into the sector from a bullish point of view. The only one that is going to make that list this upcoming week at least. But do keep an eye on that trend line. If that thing breaks, I think much like our staples, we have to at least be worried short term that there's going to be a problem. Now, the utilities, the staples, as we all know, these are defensive type of areas, and maybe when things simmer down, they'll kind of start to iron themselves out as money comes into those safe haven type of stocks. But right now, while volatility is high, it's clear that that's not the first thing on traders' mind right now. So exactly, Whitney. So that's funny. Old Sammy Hagar. So exactly. Oh, it's good. Yeah, it's the great thing about being a trader as opposed to a traditional investor. I mean, the traditional, investment style of buying and holding. I mean, it's been, I can only imagine how rough it's been on folks over the last couple of months, and especially this week. But as a trader, we've been, we're always looking at both sides, right? And so however bearish you may have been as a trader, you're not doing your job if you haven't been trading into this trend, right? So, while it's, unfortunate that a lot of people have lost money in their longer term portfolios, the more traditional investors as traders, we don't really mind this type of stuff. We can go each way, right? So that is what always was tempting to me, when I kind of was, first hearing about trading, that, wow, you can go up or you can go down. And then I heard you could stay the same through the options market. About blew my mind. And so because I'm a giant wimp. So right up my alley. So utilities, keep an eye on them. Keep an eye on that trend. Again, I think at the bare minimum, we need another day for that turnaround candle before we can seriously start to be interested in this sector from a bullish point of view. Maybe we get it, maybe we don't, but we'll kind of monitor it going into next week. Over in healthcare, we're back working through this range now. We were able to hold that support, that old support breakout point, which was, fairly important in days gone by. This sector's looking really, really rough too as a whole on an individual stock by stock basis. Those charts are looking pretty gnarly. We're right back into that range. I'll expect this to kind of act as our new resistance zone. And really, I don't think there's any logical reason we don't assume that the not too distant future we're working back down into these lows in the low 80s, 80, 80, 50, 81, somewhere in that general ballpark. Pretty clean break to the downside here today over there. As hey, they've put up a good fight amongst the bearish pressure early, but they definitely threw in the towel as of late. Over in discretionary, surprise, surprise, another very bearish day, continuing to fill up that space after breaking that support level. A fair amount of old resistance in here. This was, it was only a few months that this developed, but I mean, that was a few months of price action, right at that 92 or just above 92 range. So that should hold some significance. That should be a support level that puts up a fight from a technical point of view. Again, would I call it the bottom? No. It might be the bottom, but I won't call it until it's well beyond the point. So, but that can be an area to be keeping an eye on from, potential management point of view, from on your bearish trades, potential retracement opportunities. If we get one there, that would make a lot of sense and would, could shape up something nicely, for a couple weeks from now, but still pretty rough over there. Real estate continues to fall and fall and fall. Again, certain areas we're doing all right in this market, but they're certainly having a little rougher go of it right now. Real estate is still, it's a tough read right now. Obviously, the bears are in firm control, on the shorter term. But really, it's, if you're not in it already, it's probably, again, much like I said a couple of days ago, and in hindsight, sure, I wish I would have said I was bearish and I'm going bearish. I think I said if you made me do something, I'd go bearish, but nobody made me do it, so I didn't. So, but I still feel the same way, honestly, with this sector. A retracement could change my mind, for sure, if we see some price. But really, right now, the support level, we're really, in a lot of ways still kind of sideways. The one thing to note, though, is we did kind of take out this old top. Those of you who are, around back in this time period will probably remember that top on real estate, where it was a big breakdown, and then we kind of rallied back up and started getting our trend back on track. But it took a few months to be able to get back through that zone. We've took that out here today pretty easily. Really would have thought that should have tried to put up a little bit of a fight at least. Don't really love that. Really, the next level of support, though, is down here. So that's kind of the area that I think we'll kind of be keeping the closest eye on in real estate going into next week. And over in communication services, this one is rough. We are seeing, we saw Google today take out 1,000. I imagine you guys saw that, but just in case you didn't, you saw Google, let's go to Google, break and close below 1,000. Now, that's a big round number, and that might matter just in and of itself. But as you look at this chart, this was a major breakout point coming back into the weekly, a major breakout point, really great run, pretty much, ran right up to 1,200 when it happened. We had some trouble really short term, right? This was just a couple of weeks that we went from 12 back to 1,000 back here. There was a lot of selling during this time period, but we got to that support and boing, bounced right up off of it. And then we worked back down to it, bounced up off of it. We've tested it on a few occasions in the relatively recent past. That's a pretty significant level of support. Line it up with the fact that it's everybody's, favorite psychological, number type of thing at $1,000. That is a pretty nasty break, in my opinion. That is not a good sign. These guys, of course, make a big percentage of this sector. Facebook, again, another nightmare situation for them as they move forward. So we really got killed over in the communication services, continuing to show an absolute ton of weakness over there. Probably no reason to think Monday morning it's going to turn it around. It might. None of us know the future, but we're not seeing any buy signals just yet. Now we are getting, we're extended. We all can see that, right? And we could have argued that, 3 days ago. And I think we would have said, yeah, we're pretty extended to the downside. So, in the immediate, in the not too distant future, we'll see some sort of a relief rally. Is it Monday? Is it even next week? Well, who knows? We'll have to find out in real time. But, be careful when you see that. I imagine most of you guys are going to be much like me. We're not going to call it a bottom, probably. It might end up being the bottom. We might wish we would have in hindsight, but I don't know anybody who's going to call the next relief rally a bottom in the market. I know I certainly won't be. As we move into our dollar, we continue to trade in the range. Volatility does continue to remain high. We're seeing a lot of movement. Not a lot's happening from a broad perspective. It's pretty safe to say we're still sideways. We're still holding support. So things are, not really changed over in the dollar index right now. Very, very sideways. I would argue, again, much like, I have for a bit now, letting it come out of the sideways range. Again, if we're trading pairs, intraday in the Forex market, a little different story, but specifically talking about the dollar index, I think you let it come out of this range one way or another before you, try to get too fancy. You could trade within the range though. It's not my cup of tea and I'm not particularly great at it. I'll be the first to admit that. I'm much more, likely. I don't like when things are doing that unless I'm, doing some cash flow strategies, then hey, stay there forever, right? So, but for directional trades, not a huge fan of trading in, really fast back and forth type of market. So for me, much like, all week long and last week, I think that my approach is unchanged. As long as we hold 96, we keep the bullish bias. Overall, I'm looking at it neutral with that little bit of bullish bias until we come out of this one way or the other. So, I don't know how you guys are looking at it, but that is, really how I felt about it for a few weeks now, and certainly didn't do anything today, at least to change my mind. Over in gold, we were able to hold that break from yesterday. We did see some selling over in the gold market, but nothing that really changed our technicals. Some profit taking coming off of yesterday's breakout. We continue to hold the 200. We continue to be above the breakout point. So things are really in a fine place overall in my mind from a bullish perspective. Not a lot has changed. I really am comfortable with bullish positions in gold right now. Again, like we talked yesterday, while it may not be a major level to be stressing out about, I do think probably our next realistic challenge is going to be there at 1280 as our next potential level of resistance. So we still have a little ways to go. Watch how it holds this, but really now at this point in time, as long as it holds this low, I think we can look at this from a bullish point of view. Ideally, when I see a pattern like this, I want it to kind of hold the breakout point, but really now we can safely say that all we're really doing is trading an upward trend, right? That's all we're really doing, making higher highs, higher lows. And as long as we continue to do that, and of course, unless we break this, we will continue to be doing that, or at least on the higher low department, I think it will be fine to be looking at it from that bullish perspective. But kind of watch that 200, watch how it develops in the coming days. That can be a potential another opportunity for us if we want to move into bullish positions. I'm glad. I mean, again, if you buy day one on the break, well, you probably don't like today. But if you're the type of trader that wants to see it close above resistance or below support a day and then get in, you like days that look like this, right? We got our close yesterday and then we didn't take off and basically get no risk to reward out of it if we're trying to build our trade that second day in. So not really anything different here today, in my opinion, over in gold, really unchanged. Silver, of course, is still having that struggle. We knew that was the most likely outcome. This, was not we weren't going out on a limb when we were thinking about, that just shy of 15 causing us some resistance and being a little bit of a fight. We've seen it time and time and time again over the last several months. Overall, continues to be in that same general view that you had it for probably months. The only real difference between, any silver traders or people looking at it that I know is some people have been willing to buy on the way up, and some people like me have been too wimpy to do it and are waiting for it to cleanly break. But everybody's been looking at 15 as resistance. We've clearly seen it as in play here today. Once again, it's really been in play all week long after that nice run. So continue to watch that price. Obviously not ready to break just yet, but be prepared, right? When we're close to resistance, it could theoretically happen as soon as the next trading day. So we should never expect it, but we should always prepare for it, right? Over in the natural gas market, and we're really continuing. I mean, I like the way it's really developed this week. I still don't think there's any trade setups that or that's here, that I'd feel really comfortable taking any trades on. But we've really, kind of went pretty sideways over the course of the week. If we go into a weekly chart, now we know we're kind of hanging around that breakout point, right? And this one's kind of hard to gauge where we're going to call it. You could call it that we closed above it. You could call it we closed a little below it, but we're kind of hanging around that breakout point. If we can start to, if we can maybe simmer down for another week, kind of trade like we traded this week, and then see some movement develop maybe the following week, we might actually get a swing trading setup on it. Now, that's a lot of ifs, right? And natural gas has not been particularly giving to the swing traders, volatile as it has been. It's the type of thing that could be, at 420 on Monday, right? It could be at 440 on Wednesday. It could be at 340. So, I mean, it can move. But right now, we are kind of developing a little bit of a range. We're only a week into it. It's not really very orderly just yet. But if we can continue to see this type of price action over the next week or so, we might get an opportunity early in the year for an actual textbook swing trade. We'll see. Maybe ask Santa if you're interested in trading natural gas. We'll see if that helps. And lastly, over in the crude market, we did take out that 46 floor that we've kind of been hanging around the last few trading days. We did see some movement back to the upside after it happened. So here's our kind of initial reaction to that break of 46. Very quickly saw some movement to the downside because people were going to be jumping in below 46, right? Or the bulls who've been playing that bounce on the intraday were going to be jumping out. So we saw some pretty quick movement to the downside when we took out 46. We were able to rally back up briefly. We tried to kind of, we broke back through it. We tried, and again, this is intraday, but we did pull back into that, try to test it as support, took a nice bounce, made a lower high, and then took it out. So, I think that is a little bit of confirmation. Now we can kind of look at, this low point from here today as another potential, intraday entry from a swing perspective. I mean, really, what do we say that we haven't been saying for forever? You break 50, there's really no support. Nothing's developed yet. We have a ways to go before we get to that. And again, I don't know where you want to call it. Folks are calling it 42, some 43, some 44. It's definitely a zone, and that's how I look at it. So whatever your number is, I think as we approach it and you're thinking about how you're going to manage that trade, think about it as a zone and not a specific number is the approach that I will be taking, at least, whether that's scaling out at 44 or, converting to bull puts at 44 if you're doing, trading the options market and crude or over on USO. I don't really love, tighten up a stop too much because these guys can move, but that's kind of a me thing, not necessarily that I'm right in feeling that way. But we've got a little room to go, but we're getting awfully close to that target range that we've all been kind of, looking at. Again, it can happen fast. This is the great thing about trading in bearish markets. We've moved faster this week than we should probably get accustomed to, right? We saw a ton of selling, but things do have a tendency to go down faster than they go up. And that is long been true. And so while ultimately, as we continue to move forward, assuming we are going to continue to move into a bear market, and I believe the NASDAQ officially made it. I think it's down a little over 21%. So I think it's official in the NASDAQ here today. It should die down. We're not likely, again, I don't know the future, but I would assume, I've never, not seen it kind of die down on the volatility and kind of go back into that, normal trendy style. But we shouldn't assume that's going to happen until it does, right? So as we move into next week, obviously it's going to be a short week on the trading front. Relatively light volume is what I've come to expect over the holidays, but this is a little bit of a different market than most Christmas markets. So we'll see if that's how it plays out. But do expect the volatility to remain, expect the bears to remain in charge until they stop being it. Think about, again, let's not prepare to do it tomorrow, but think about, how you're thinking about playing anything once we do see the retracement. Obviously, from a broad point of view, I'm not buying against the downward trend, but there might be bullish opportunities that I'm interested in, at least in theory, when the market does eventually go into the retracement, the bear retracement phase. Maybe we are, maybe we aren't, but think about, how you want to approach it. Go through those watch lists and figure out, hey, if this pulls back, again, it never hurts to ask. If crude pulls back to 50, I'm really excited about a sell. Do I think crude's going to pull back to 50? No, I think it's going to hit 43 before it does that. I don't know that. I think that, right? But it doesn't hurt to prepare. Hey, if this does get to 50, that would be a price I'd be very interested in selling if I could get some signals to confirm it. As you're going through your watch list this weekend, think about that. A lot of the things that you're looking at are going to be very extended to the downside. Of course they are. That's what the market looks like. At some point today, I checked, and there was more than 100 S&P 500 companies that were hitting 52-week lows. It's down. it's bloody, right? It's red. So yeah, Abel, I wouldn't mind seeing a little run. What I'd love to see is it kind of work, into 44, and then, kind of, hang out for a few days, get us out, then rally back into 50. That would be beautiful. That would be right up my alley. So hopefully we get that. We can ask, right? It never hurts to ask, never hurts to think about what if as a trader. And I do think that's a good habit to get into. And I think you guys do a good job. And I think we can always all do a better job of planning ahead. Hey, yeah, we don't know, Abel. We have no control over it. I don't even think it's going to happen. But what if, right? We can be ready. We can hope for a retest at 50 in the days to come. Of course, after it's hit our target price. I don't know about you guys. I had a little lower target price in mind, but we're getting pretty darn close. We're getting pretty darn close. So, Abel, no, not necessarily. So Abel just asked, would I wait for a market retracement? Not necessarily. If I find things independently capable of breaking on their own, I would be okay with going into it. Trying to think of some good examples off the top of my head here. Baker Hughes, somebody I kind of found they're kind of a low base breakout. Yeah, so I'm not going to be looking to find the things that are really extended to the downside, kind of looking like our overall sectors, but I'll be looking for things that are kind of holding their own low bases here. A few that I found today: Baker Hughes, Dow DuPont, HUN. So if I'm seeing patterns like this, or if I'm seeing things that are breaking longer term levels of support, here you have Brown Forman has kind of held up okay this past week amidst all the selling. But as you can see, they're at a pretty clear floor here. So if they were to theoretically break next week, that could be the type of pattern that I would be looking for with trading into the bearish market. So there are still things out there for sure that don't have that extended to the downside look. And I am personally open to going with that, but I'm going to be looking for things that haven't broke or recently, broke, support. And that will kind of be the approach that I'll take. So exactly those low bases. And there's some, I'm trying to think off the top of my head. I saw someone and I just did my preliminary go through, but I ran into somebody today. Yeah, BTU. I think I saw them as well. Yeah, that might be one. Yeah, that's a good one. Yeah, I saw them. That's exactly the type of setup that I'm kind of looking for there. And if you're finding things with more major, it might be VNO here. I'll go into. These guys are very extended to the downside, right? There's no doubt about it. But as you kind of look at it, was it on a monthly chart? And I think it was these guys. That they're breaking a lot of support. They're going to be breaking a monthly moving average. These guys are not quite the guy I was thinking they were. But if I'm finding something that's really extended to the downside, but it's breaking a major level of support, then I will be okay with it. And so I trying to off the top of my head, I found a lot more of those low base breakouts, but something like Celgene, Guild. I think Guild was one. I really liked these guys. Yeah. So pretty long term. So I'm good with that approach from a bearish point of view, as opposed to kind of jumping in. So yeah, and that's fine to be. There's no rush. If this is, we're going to get opportunities, guys. And so of course we're going to want to do something on Monday morning or on Wednesday when we get back from the holiday, or next week when we come back, a week after the market. We don't have to run into these things by any means. We can make sure they develop into the type of patterns we like. If you're not comfortable trading into an extended downward move like we're seeing right now, that's fine. I can't blame you. I don't judge you at all for that. I do think there are things that we can still do, but I don't think there's any harm in saying, hey, let's get a retracement and let's get our entries at that point. No one's going to retire off of next week in the market, right? None of us are going to, retire because we do or don't take two, swing trades to the downside next week. So, sometimes it feels like we need to make sure we get something. We want to make sure we're doing our job. And if it's an opportunity that we do like, that we're taking advantage of it, right? If the opportunity's not there, but we looked, we're doing our job. We can't make the opportunity look like we want it to look. We have to kind of be patient, wait for it to develop. So that's always going to be my opinion. The market should be open on Wednesday. It will be open on Wednesday. We'll be closing at 1 on Christmas, 1 Eastern, and then obviously we'll be off Christmas, and then we'll pick back up on Wednesday. So yeah, Ed, good time to finish the bear market survival guide. Again, no one knows the future, but the simple reality is we're very bearish right now. we're working into it. We're very close in our indexes. I think the NASDAQ actually hit it. I didn't do the math, but I saw the headline. I'll assume the headline wasn't lying to me. and so, yeah, it's we should assume more bearish activity as we go into 2017. And that's okay, right? That's okay. We can protect our long-term portfolios. We can trade to the downside as swing traders. We can still implement our cash flow strategies. So, yeah, that is correct, Ed. Yeah, that is correct. So we won't be doing our recap or anything like that on Monday and Tuesday for the Christmas and the New Year's holiday. I'm not 100% sure. I'm planning on being here for the recap on Wednesday. And so, I don't know if anybody's going to be here with me or not, with it being the holiday, but I'm planning on showing up on Wednesday. But yeah, we will kind of pick back up business as usual going into Wednesday. Over the holidays, we'll just forget about the market. I know, the sad thing is, Abel, is I'm such a creature of habit, and I don't like anything to interrupt my routine. And so I hate the holidays, not because I hate the holidays or I'm Scroogey. It's because everything I do day to day has to change. I'm no longer getting up and turning the computer on and going over things while I'm waiting for the coffee to brew. I don't like taking a break. Not with this stuff. I like following the markets. I don't consider it work. I consider it fun. So, I'll be looking forward to 2 weeks from now, once New Year's is over and we're back to normal. That's when I'm going to be excited. Now I'm going to enjoy, the holiday with my friends and family. I hope each and every one of you guys and do the same thing. That's always something we want to make time to do. But yeah, I'll be happy to get back to work too. Don't get me wrong. So, ladies and gentlemen, that will do our market recap for the week and for a little bit before we pick back up here midweek next week. But as always, guys, it's my pleasure, and it's great to see you guys as always. Certainly thank you for being here. Be sure, if you haven't already, if you're new here, to subscribe to the channel and hit the notification bell so you can be alerted to whenever we got something going on. If you haven't already, go check out those the option series that we set up here just a couple of days ago, going over those deltas over on our YouTube channel as well. Can help you get a better handle on those option Greeks. Always a little bit easier if you're working on your options. So, guys, it's always a pleasure. It's been a lot of fun. Thank you guys so much for your support here at the recap over at Taco Trading, for all the hard work you guys do. We love you. We appreciate you. And we're looking forward to an even more exciting 2019 with each and every one of you guys. So get the heck out of here. Have a wonderful holiday, and I shall see you in the next one. I guess the next one's just a little ways away. So bye, everybody. Have a great holiday.